Hello everyone, and thank you for joining today's Trading True webinar. I'm excited to be here. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I'm a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the main topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. So we are going to discuss the previous week consumer price index, the CPI related to AUD USD currency pair. And we're also going to discuss GDP, the gross domestic product related to Canada, and we're going to discuss the USD versus Canadian dollar currency pair. Okay, so what is CPI? CPI stands for Consumer Price Index, and Y over Y means year over year. It measures the percentage change in the price of a basket of goods and services purchased by Australian households compared to the same month a year earlier. It is the primary gauge of inflation in Australia and one of the most influential indicators for Reserve Bank of Australia's monetary policy decisions. Rising inflation typically strengthens the Australian dollar as it increases the likelihood of higher interest rates. Conversely, lower inflation can weaken the AUD by raising expectations of monetary easing. Now, on Wednesday, 27th August 2025, the CPI data that we got is the previous number was 1.9%, forecast is 2.3%, and the actual number we got is 2.8%. The actual CPI uh, number is actually greater than the forecasted number, and this thing is telling me that it brings inflation back with the Reserve Bank of Australia's 2 to 3% target band. The rise was largely driven by higher fuel costs, rising rents, whether their homes or shops, and sticky services inflation, offset partially by subdued wage growth and weak consumer demand. Despite the figure being better than the expectation, the confirmation of inflation back within targets strengthened confidence that the Reserve Bank of Australia may hold rates steady for longer rather than cutting soon. This helped underpin AUD demand, leading to an upward move in AUD USD immediately after the release. Now, the potential market impact on AUD USD currency pair is, well, we got a number which is higher than the expected 2.3% number. Okay, so this would have fueled expectations of prolonged high rates, strengthening the AUD USD further. So the overall analysis is the August CPI release confirmed that the inflation is back within the Reserve Bank of Australia's comfort zone, reinforcing policy stability. The AUD the AUD the Australian dollar reacted positively as traders saw reduced risk of imminent rate cuts. With the upside move in the AUD USD was not explosive, it reflected market relief that inflation is not slipping further below target. So the conclusion is the CPI data that we got, it actually uh, increased the forecasted number, okay, but still provided a bullish catalyst of AUD USD, which moved higher. Let me show you the chart of AUD USD currency pair as well. So is the chart of AUDUSD. This is the chart of AUDUSD currency pair. Okay, and if I remove all of this, zoom out a little bit. So on 27th August, price action actually rallied up over here. Okay, it moved higher. Okay, so the upside move in AUD USD was not explosive. It reflected market relief that inflation is not slipping further below target. So the conclusion is the CPI data that we got, it's actually greater than the forecasted level, which provided a bullish catalyst of AUD USD, which moved higher following the financial data release. Going forward, sustained inflation around or above 2% strengthens the case of the RBA to maintain its current policy stance, supporting Australian dollar in the medium term. The next one is the GDP data report, the gross domestic product month over month related to Canada. Okay, what is GDP M over M? M over M stands for month over month, and GDP stands for gross domestic product. So, gross domestic product month over month measures the change in the total value of all the goods and services produced in Canada compared to the previous month. It is the most comprehensive indicator of economic activity and a key gauge of the country's overall economic health because GDP is closely tied to employment, consumer demand, and business investment. The data has a direct impact on expectations for Bank of Canada monetary policy. Stronger growth tends to support the Canadian dollar, while weaker or contracting GDP can pressure it lower. Now, what we got is we got no change. The previous number was minus 0.1%. The forecast is again minus 0.1%, and the actual number we got is again minus 0.1%. So we got kind of a sideways type of price action. Okay, if you take a look at a price chart of USD versus CAD currency pair, and we check out the 29th August over here, we got kind of a doji over here, and then as of today price action is trying to rise back over here. So on 29th we got kind of a muted reaction because the actual financial number that we got is the same as the previous month number, and it's also matched the forecast level as well. Okay, so the GDP result of minus 0.1% meet the forecast but marked a welcome rebound from May's contraction. The market response was CAD strength and a move lower in USD CAD. So overall, we got kind of a mixed price action. Okay, going forward, sustained modest growth will likely keep the Bank of Canada cautious but not pressured towards immediate rate cuts. Next, let us take a look at previous week global market trends, and we're going to discuss the euro dollar and US dollar Swiss franc currency pairs. So let us take a look at euro dollar currency pair. So this is the chart of euro USD over here, and the price action in euro dollar is actually going nowhere. In last few trading days, market is trying to move inside this trading range, few pips up, few pips down. Now, if you check out the US dollar Swiss franc currency pair, we got almost the same price action. Okay, let me um, delete this trend line. So this is what we got over here inside US dollar CHF currency pair. Overall sideways price action, a little bit bearish as well, but market again rebound. Okay. Now let me talk about the current week's macroeconomic events and data releases. And I will be covering the key developments in Forex market with a focus on fundamental analysis. The first one is the CPI Consumer Price Index month over month related to Switzerland. And I'm going to discuss the US dollar versus Swiss franc currency pair. And the next one is the September 5 non-farm payroll data report, also known as NFP, related to USA, which comes on first Friday of mm, every month. So first week of the Friday, we get this report one time in a month, and we're going to discuss the euro dollar. Okay, let's start with the Thursday, September 4th, Swiss inflation financial report. Okay, so what is the CPI or consumer price index? Let's talk about it. The consumer price index month over month, also known as CPI M over M, measures the change in the average price of goods and services purchased by the households in Switzerland compared to the previous month. It serves as the key gauge of inflation, reflecting short term price dynamics across essential categories such as food, energy, housing, and services. As one of the most important economic indicators, CPI month over month provides insight into consumer purchasing power and overall price stability in the economy. Because inflation directly influences financial conditions, the Swiss National Bank SNB closely monitors this data when shaping monetary policy decisions, including interest rate adjustments aimed at maintaining price stability and supporting sustainable growth. Generally speaking, a higher than expected CPI increases the likelihood of tighter monetary policy, strengthening the Swiss franc CHF. A lower than expected print, on the other hand, may encourage a more dovish stance, potentially weakening Swiss franc and pushing the USD Swiss franc higher. Now, on September 4th, 2025, the previous number we got related to the CPI financial report is 0.0%. The forecast is also 0.0%. The actual data not yet released. Markets are expecting no monthly change in consumer prices, with both the previous and forecast readings flat at 0.0%. This suggests inflationary pressures remain subdued, keeping the focus on whether any surprise deviation emerges. Even a small move away from zero could generate volatility in US dollar Swiss franc currency pair, especially if accompanied by signals from the Swiss National Bank or shifts in global sentiment. The possible scenario and impact, let's discuss about it. Well, if the CPI is higher than the forecast, meaning above than 0.0%, this is going to signal rising inflationary pressures. and it may increase speculation that the Swiss National Bank will avoid further easing or consider policy tightening in the future. And this is likely going to strengthen the Swiss franc, leading to downward pressure on US dollar Swiss franc currency pair. Now, if the CPI matches the forecast 0.0%, then it means as inflation remains stable and flat, no change, and you do not expect much of a price action. You expect sideways price action overall inside US dollar Swiss franc currency pair. So the market reaction may be limited if we get a 0.0% number, unless we get some kind of a major economic data, a financial data release, or a central bank commentary on the Swiss franc. So USD Swiss franc may consolidate and take direction more from US data or broader risk sentiment. Speaking of US dollar financial data, this is what we're going to discuss next after a few minutes time. So if the CPI in Switzerland is lower than forecast, meaning we get a negative reading, this indicates disinflationary or deflationary conditions, and this could raise expectations for a more accommodative as SNB stance, and this is likely to weaken the Swiss franc, pushing the USD Swiss franc currency pair higher. Now, the broader market context is the SNB has maintained a cautious approach to policy, balancing the need to control inflation with the risk of slower global growth. With inflation cooling worldwide and Switzerland's domestic economy growing at a modest pace, markets are closely watching the CPI release for clues about the SNB's stance relative to other major central banks such as the Federal Reserve. So the key takeaways for USD Swiss franc is if CPI number comes greater than 0.0%, then it means that's a bullish number for the Swiss franc and expect a drop in price action of US dollar Swiss franc currency pair. If the CPI is below than the 0.0% number, then that's bearish for the Swiss franc and expect a bullish leg inside US dollar Swiss franc currency pair. Now, if you get a neutral number, meaning you get a 0.0%, then that's neutral for the Swiss franc, and price action is probably going to move sideways. Or we would say that market focus shifts to global sentiment or USA financial data. So the conclusion is the September 4 Swiss CPI month-over-month report will provide valuable insight into short-term inflation trends while markets expect no change from the prior month. So even a small surprise in the financial data of CPI could influence expectations around future Swiss National Bank policy moves. For Forex traders, the key will be not only the CPI release itself, but also how it interacts with US economic data and broader risk sentiment in shaping the next moves for US dollar Swiss franc currency pair. The next one is the non-farm employment change related to USA, and we will get this report on Friday, September 5th, 2025 at 12:30 p.m. UTC time. Now, what is non-farm employment change, also known as NFP? The non-farm employment change, and or also known as NFP financial report, measures the monthly change in the number of employed people in the USA, excluding farm workers, government employees, and non-profit staff. It is one of the most impactful data releases in global markets, offering a real-time snapshot of the United States of America labor market. Now, this financial report is released by the Bureau of Labor Statistics. The NFP financial report is closely watched by Forex traders and policymakers alike. Strong job growth typically bolsters the US dollar by reinforcing expectations of tighter monetary policy from the Federal Reserve, while weak reading may fuel a more dovish stance. So the expectations. Well, the previous number we got was 73K. The forecast is 74K. The actual financial data is going to be released on Friday, September 5, 12:30 p.m. UTC time. So markets are actually anticipating only a marginal improvement in USA job growth, with the forecast set at 74K versus 73K previously. The subdued figure underscores a labor market that appears to be cooling, consistent with signs of a broader economic slowdown. While expectations are muted, traders will also pay close attention to wage growth and the unemployment rate, which could alter the Fed policy outlook. Now, let us discuss possible scenarios and the impact on euro dollar currency pair. If the NFP beats the expectations and we get a greater than 74K number, that is going to signal stronger than expected labor momentum. And this could revive bullish sentiment in the US dollar, triggering a pullback in Euro USD. A break below near term support levels may mark the beginning of a broader USD rebound. So if the number matches the expectations, like the expectation is 74K and we get the same number, that suggests a stable but subdued labor market. So the forex market reaction may be limited, keeping the euro USD within recent ranges. The next direction of the euro dollar will likely depend on wage data and broader Fed related commentary. Another scenario is if the NFP misses the expectations and we get a less than 74K number, that is going to indicate a weaker labor market conditions. And this is likely to weigh on the dollar, fueling further euro USD strength. However, upside may be capped if euro USD is already overbought, setting the stage for a potential exhaustion top. So the technical context is the euro USD at a risk of a pullback. And if you take a look at a price chart of euro dollar currency pair, euro USD is already trying to drop over here. Okay. So Euro USD has rallied recently on softer US data and moderating Fed expectations, but the Euro dollar currency pair is now, testing some key levels, and as of today, we're actually getting a drop in price action. Okay. So the expectations is that the number and different scenarios that I discussed, that is going to move the market up or down, and it also based on the non-farm payroll data report financial number. So the overall analysis is the September NFP release comes at a pivotal point for Euro USD, with the pair hovering near resistance after a strong bullish run. Even though consensus expects only a modest gain of 74K, the details, particularly wage growth, will be crucial for Fed rate expectations. A stronger print could be enough to halt Euro USD's advance, while a weak reading would reinforce dollar softness in the short term. So the conclusion is, with the Euro USD extended to the upside and technical resistance overhead, the September 5th NFP financial report could act as a catalyst for a turning point. If job growth surprises to the upside, the dollar may stage a recovery, pushing the Euro USD lower. Conversely, a soft reading would likely extend USD weakness. The gains in Euro USD could face resistance due to stretch positioning. Traders should remain alert for volatility around the release and may be ready for momentum shift. Next, let us take a look at current week global market trends. So these are the currency pairs that I'm going to discuss. I'm going to discuss the Euro USD and US dollar Swiss franc and AUD USD and spot gold. So let us start with euro dollar currency pair. Well, if you take a look at a smaller time frame, like a 4-hour chart, you can see price action is falling down. However, you see it's still moving inside some sort of a trading range over here. So it's kind of a range bound market. Okay. And if you take a look at US dollar Swiss franc currency pair, overall market did try to go lower. Okay. You can draw a simple trend line. Okay, so overall this looks sideways and plus bearish in just dollar Swiss franc. But again, it's trying to come back into this channel of downward sloping trend line. We might get a retest over here, like the way we tested over here. Next one is the AUD USD currency pair. Okay, Australian dollar versus United States dollar currency pair. Now the AUD USD currency pair, you can see we got this big sell off today, and this is kind of a big move to the downside. Okay, now if you take a look at a 4-hour time frame, you can see we got this big washout to the downside. But if you check out the daily chart, it's still going sideways. We can draw this box over here, so you can see it's still going nowhere. This is kind of a sideways price action going on overall inside AUD USD currency pair. Okay. Next, let us take a look at spot gold XAUUSD pair. Okay, XAUUSD pair, we got a nice bullish breakout over here, and price action. I was kind of expecting a drop in market, but price action just keep firing up over here. So it shows that the gold is becoming expensive and the United States dollar is becoming weak. But that's with the spot gold. If you check out the euro dollar, the decline in euro dollar is suggesting that the United States dollar is becoming strong and euro is becoming weak. Same goes with the AUD USD currency pair. The decline in AUD USD currency pair is telling us that the Australian dollar is becoming weak and the United States dollar is becoming strong. Same goes with the US dollar Swiss franc. This bullish leg in US dollar Swiss franc is suggesting that the United States dollar, the DX, is becoming strong and the Swiss franc is becoming weak. Okay, but regarding the spot gold, overall we keep getting higher swing highs and higher swing lows. So we keep getting this nice uptrend over here. Okay, so I expect further upside in spot gold. Okay. Okay, if you have any questions or comments, feel free to type inside the chat box and I will be happy to answer your questions. So let us review what we have learned today. We discussed about the CPI, Consumer Price Index, related to Swiss franc, and I discussed the US dollar Swiss franc currency pair. Then we also discussed about the non-farm employment change, the NFP data report related to USA, and we discussed the price action in euro dollar currency pair. And then we also discussed the Euro USD, USD Swiss franc, AUD, and spot gold. These are the assets to watch out for profits. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. And if you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, September 9th, 2025 at 12 p.m. UTC time. So that's pretty much it for the time being from my side. Have a nice day and bye-bye.